All right, welcome. Okay, welcome to my channel. Okay, today I'm actually bringing us a tool that you can use to trade any pair, any volatility pair, be it volatility 100, volatility 75, volatility 50, volatility 25, including even all the volatility 1s. You can see the current trade right now is volatility 51s. Now, this actually signal, this actual indicator is going to be for a swing trade, so it's not really for scalpers. So if you're a scalper, you can try and use it on 1 minute time frame, but it's ideal, it's advisable that you use it for swing trade, that is a long time trade, that trade that runs long time. Because if you use it for swing trade, you're going to enjoy it more, and it will be much more accurate than if you use it for if you try and use it to scalp. Now, why did I use that statement? Now, when you are trying to scalp on a 1 minute time frame, there are tendency for the following to actually happen: that the market is quickly having a quick and sharp reversal. So you might enter very late, most especially when you are entering all these 1s pairs, whether volatility 25 1s or 51 1s, they are very, very volatile. So even before you make entry, including volatility 100 itself, so before you make entries, you might already be running in loss automatically. You might already be in loss automatically. And if you're already in loss, you know what it means. You're losing. It's not gain. You're losing already. So it means that your money is going. And for you to even think in the first place that you want to scalp, then that would be probably because your account equity is not much. You just quickly want to scalp and double the account quickly. So, and it will not really help. Okay, for example, now I'm using this on the volatility 51s pair, and I'm actually trying to use it on these demo accounts now, so that I can use it and concentrate much. I don't want to really be closing the trade while I'm explaining. Okay, now this indicator, the way you use this indicator is very simple. All you just need to do is just pay attention, watch the video to the end, and when you watch it to the very end, like and comment if you have any comments, and subscribe if you've not subscribed to the channel, and message me on Telegram and send a screenshot. Then I will give you the indicator free of charge, without charging. Even though it's a premium indicator, but I'm going to give you free of charge. Now, what happened is that the indicator are a series of indicators, so you can combine them together and actually have it on a template. Now, many of you might sound somehow about it. All these the combination of these indicators are actually, the indicators are combination. Okay, they are combination. Then I put them together in one, then it becomes a template. So I'm going to send all the indicators individually to you. Also, I will also send the templates that I've already also put together. Now, if you're actually using the template that I've already put together, if you come up directly on your system, because some device it might not come up. So if you come up with on your device, you will have it like this. But if it does not come up, then you have to do it manually, or you did not see anyone and miss them. So you have to do it manually by yourself. The indicator that comprises in this thing is the indicator for the resistance and support. So you don't have to be the one looking for resistance. You don't have to be the one looking for support. And also then the other indicators spot reversal of the market and help you to make more advantage, take more advantage of the reversal. Now, this is the way it works. This is the way it works. The signal for you to make entry for a sell. Okay, let me just pause the video. Okay, like I said, sorry that I just have to take time. I just need to just clear some things. Okay, now you can see that the trade was in profit, a little bit profit before, and it's running back into losses. And this is the reason why I even explained to us that this is not really meant to be used to scalp. Okay, most especially volatility 51s. Volatility 51s is a very dangerous and volatile trade, so you have to be careful. Now, what this thing actually help you to do is to spot the reversal of the market. Now, I don't want to let the video prolong. Like I said, it comprises of the moving average. It comprises of the support and resistance, so you don't have to be the one spotting the support and resistance by yourself. And also it shows you the reversal. Now, this actually helps you to know. Okay, you can see this one help you to know the exact time to make entries. Now, you are confirming not with one condition. The first condition you're confirming is that you are making entries at a genuine point. That is, you have seen resistance or you have seen support. That's number one. But that is not enough. Then after that you have confirmed that you have resistance or you have a support, then the next thing to do, to look out forward to now, is to see that the color has changed here at this background area. Now, when the color changes from green to the red, now the trade, you can see that when we make the entry, the trade is just returning back to the resistance. Then from this resistance, now the trade will drop. Now, instead of we actually prolonging the video to see until the market drops again, I would like to pause the video and we'll come back. You can see the time that I have here now. So let's come back and see maybe in the next 1 hour and see what has actually happened from our trade. Okay, so you know what you need to do to get the the indicator. Just subscribe if you've not subscribed. If you're a subscriber, no problem. Just send me the screenshot of the video and show that also show that you are a subscriber, so that I can actually send it to you. Because if I did not see any sign that you're a subscriber, I will not send to you. But if you are a subscriber, send it to me, and with a proof, that is a screenshot, for me to see that you're a subscriber of this video, on this video. And don't forget also to comment. Okay, your comments really goes a long way. So make your comments if you have watched the video, and if you have used them, you can come back and make comments about them. So I would really love it if it works very fine with you. Give me a thumbs up. Then if you have any challenges, let me know. Let me know. If you can send me a message on my Telegram, but I did not respond quickly, make sure you just send it here. I will go through them and I will respond in my next video. All right, like I said, let's make a pause and see what the outcome will be. Let's end the next 1 hour. Okay, sorry, the other video closed, and that's why I have to start another one all again. Okay, now just from the continuation of what we said, that we should pause and see what the market will do. You can see now the market is now coming back. Now, where I put my take profit is actually the psychological level, the key level. Now, where is the key level? Now, the first take profit that you can see my red, another red. Now, these are the two set of take profit that I set. Okay, now why did I set one somewhere and set the other one another place? The reason is because the first level here is very certain that the market is going to get there. Why? When this market was going up, when it got here, when it got here, the market dropped, continue upward, then comes back again. Then this market that is actually coming down, return from that same level, went up. Meaning that this is a key level that if the market have reached up again and is coming back, it will first of all touch. It's very certain that this trade is going to touch it now. Then after touching this level, then it can now return back up, even though we are not expecting it to return up, because we already have a strong thing telling us that the market is supposed to sell, supposed to drop. So we believe that we can hold on to our trade. Now, I'm going to close some trade at that point, and I'm going to hold some trade and see what actually happened. Now, the one I'm going to hold, the moment it beats that level below, I'm going to break even. That is, put my stop loss at my entry level, and I will even protect little profit. But if the market turn around at that level again, that key level again, and could not break below, I will close manually for those trade. Okay, I'm going to close manually for the trade. All right, now what are the conditions that you have to really maintain if you want to use it, most especially if you want to use it for volatility 51s? Now, if you're going to use it for a pair like volatility 51s, you already know that even with the lowest volume, which is 0.005, the lowest volume of 0.005, something is quite different from volatility 75. Volatility 75 give you opportunity to open 0.001, but this give you only opportunity to open 0.005. You have to make sure that you are entering at the levels, whether resistant or support. If the market have beat resistant or support, but if you are trading volatility 51, you should have known the reaction of that. The market will return back to that key level again, test it again, and give you opportunity to re-enter. Now, but people that thought, fear of missing out, that they don't want to miss out, that the moment the market is already stepping out, they make entry. Like this trade, when I started this video, that's what I did, just to explain. And you saw it running in losses, and the market went up and returned back. But how sweet will it be when I've seen this confirmation here, that it is below the resistance level? I've seen the market rejected now. I'm only expecting the market to return back to touch this level. Then I make my entry after this candle has finished. And I make entry with this buy candle, this sell candle. Okay, this blue are my selling candle. Now I make entry with the sell candle. Confidently, the market will be in good profit as we are speaking now. Though still also the market is going to hit the take profit as we said, even though it's returning back. Now, the major reason why you see volatility 51s in this case actually doing like this, I will explain, is that the market is not yet on a sell trend. The market is still a buy trend. We are only just like scalping. But I'm a day trader, and that's why I'm using 15-minute time frame. Now, if you are the one that you want to really make the rest of it, you don't want to really, take the chances of your account. You don't want to lose your account. You want to actually make just one entry, relax, and sleep. You can use 1 hour time frame or 4 hours time frame. Now, if I put it on 1 hour time frame, you see another thing, a little thing different. You can see now that the market has not even gotten to the red zone, the major resistance zone. So the market has not really gotten there. So you've seen what I'm talking about now. So that is why you are seeing this trade running a little bit and returning back. If I've actually seen spot better opportunity for buy, I would have made entry for buy, because the market is a buy trend. But I cannot see an opportunity for sell, and because I see that the market on the higher time frame is still buy trend, I now enter for buy. It's not going to be big, because the lower time frame is going to do their own first before the higher time frame do their own stuff. Okay, so like as I was saying, so we expect the market to actually still come down and sell, because we're using 15 minutes time frame. But you've seen the reason why the market seems as if it's more slow to actually sell, because the market trend is not really a sell trend yet. It's a buy trend. So that is why you're seeing it running into $10 profit, returning back to -2, -3, then returning back again to profit. So it's going to still sell eventually, reaching that key level, and might continue for a buy. Okay. So, but because of the time, I hope you understand better that if you want to now enter for a safe entry, you know that okay, red is the key zone, and also green is the key zone for a buy. Red for sell, resistance, and green for buy. So you make entries for buy, and you make entry for sell. Now you know if you have been on 1 hour time frame, if you have used 1 hour time frame, and you've seen the flats here, and you make, like I told you, now see the market actually touched here, went up. Some people would have rushed in when this candle is buying, thinking that they are missing out already. Now, the Rive will do it for them and bring the market down. Many of them would have set their stop loss here. Then the market will hit their stop loss. Then start that journey. Now, they have lose enthusiasm. They've lose strength. They've lose desire to trade. Then the market will now play out. See how long the market now started going. So it's patience that is very key. So entering at the right time will secure you good profit and save you headache. So that's why I said it's good and very sweet to use 1 hour time frame. Also, you can also do it also on 15 minutes. Remember, I'm making entry because I see this minor resistance. It's minor resistance because it's just a key level, and you know resistance becomes support became resistance. That's why you can see it as a green. If it is red, you will know that it's a strong resistance. Now, see the market under it, you know that the market is supposed to fall. If the market is actually touching the red zone, you know the market is going to fall. It's not that it's supposed, it's going to fall. Then you just wait for your confirmation to enter. So, like, what I will advise is that if you're holding if you're going to use it for volatility 51s, use a very make sure you enter like a tight entry, like I said. Wait for the test of the market before you make your entry. Okay, calculate your risk and don't trade. If you are holding an account of, let's say, $100 account, it's suitable that you make entries on 1 hour time frame. And for $100 accounts, make sure you don't trade beyond 0.005. Now, I know we might be greedy to want to trade 0.01, okay, for an $100 account. But what actually will happen is that, you know, you are opening like that on $100 accounts, and like this particular trade, though this one is not the perfect example, like I said, but this particular trade that where I make the entry, the market retraces back against it up to -20 something. Now, meaning that is exactly what you might experience if you also enter too early. But if you don't also enter too early, you might also experience a drawdown, a loss of run a float of let's say -$15 before the market now eventually plays out. Sometimes, not all the time. But if that happens to you on an $100 account and you're already seeing a float of more than $10, you know how you start reacting, how you start feeling. You start doubting whether that market is going to go your direction or it's not going to go in your direction again. Then you might have decided to quickly close the trade and look. But if you trade 0.005 and you still have $100 accounts and you already knowing that you're going to, in the take profit, you're using like 1 hour time frame. So your take profit is actually aiming to actually make no less than $20. If your risk to reward is 1 to 2, you are trying to make nothing less than $20, and your stop loss you can also risk up to $10. So meaning that you are gaining 10 or you are losing, you are gaining 20 or you are losing 10. But you know that the chances of you losing are very slim. I'm only just saying like that. But that one will give you confidence that you can even hold that trade for long. That knowing that market is going more in that direction, like I show you on 1 hour now. Somebody will make entries from this screen now on 1 hour. The next thing is looking out for is the market at either the market reaching here or the market get to any other key level here. Now the person make entry here, if it's not any other reason, for any other reason, he's not afraid, he's not anything, the only place where he closes the trade is here, where you see the flats, the thing looks so flat, then he closes the trade around this area. Now look at the market from here to this area. You cannot, I don't think you want to really calculate how much profit that would have generated for that person that make that trade. It may take just 2 days, like I said. If you're using 1 hour time frame or the 4 hours time frame, most especially on volatility 51s, be thinking of being a swing trader. Okay, but if you want to scalp like me now, go to just 15 minutes, then you can scalp with the 0.1. When you start seeing $10, seeing $15, seeing $20, you exit your market. Okay, after all your conditions are met. So it's very important that you do account risk management on your account so that you don't blow your account, even despite that the analysis is right. So if your account is already blown, if you are holding an account that is very small, like $10, $20, I will advise you not to go to 51s. You can use volatility 100. Sorry, you can use volatility 10, volatility 25, volatility 50 itself. Don't use 51s for 50. You can use 50, but just stay away from volatility 50. 25 1s and 51s. You are holding accounts like $10, $20. But I'm not saying you cannot trade with them. I just show you the risk now. If you know you want to take the risk, you are holding a $10 account and you know that the drawdown I will enter this like a sniper entry. I waited for the market to retest again and I make entry. So I'm ready to risk $5 out of my $20 account. Fine. Then you know that if you lose, if the market draw down to $5, you have to close the trade so that you can be able to trade another time. Then if not, no problem. Then the market eventually may go in your direction, and before in just a short period of time, you double the account. In fact, if you are doing it on the 1 hour time frame, all you just need to do is go and sleep. Then your $20 account with the $5 risk that you have set the stop loss and the take profit at the resistance. After the first day, the second day just came back, and you see that your $20 account is already carrying a trade of plus $100 already. You are making in just 2 days, you have seen $100 on your account, meaning that your account is now showing 120 in equity in your balance of 20 before. Then you close your trade at $100. You know how wonderful and sweet that one is. When you've also eaten the stop loss $5, you know that you're good. I'm not saying you should not trade 51 days if you have a $20 account, but I'm only saying that the psychology of the amount you want to losing 25% of your equity sometimes might really affect you. You want to cover back, and before you know it, you lose more in the market. You lose more and you lose more and you lose more. So that's very important. So if you are holding a very small account and you are very, very in love with the volatility 51 net, I will advise you just stay higher time frame. Higher time frame, like 1 hour. Don't use 4 hours. 4 hours is also very deadly for your account. Just use 1 hour. Okay, use 1 hour. Make sure that the market return back before you make entries. Then make entry. Then know that okay, you're risking like $5. You've set your stop loss. Then expect the market to continue playing up. When the market have actually gone above very well, protect your own entry. Just put it at break even. Now, if I lose, if the trade closes, I will be out in break even, a little profit. I'm not going to lose at all. I will be out in a little bit. So that's break even profit, or I will be out with my equity. All right, you can see now that the market eventually return back. All right. So what you just need to do is simple. Okay, just message me. I will give you all the indicators, and you already know how to install them. Then you drag and drop on your chart. Once you drag and drop it on your chart, it's simple. You already can use it. All right, bye for now. Peace.